Ho, welcome back to Closing Bell. I hope you kids are enjoying the Santa rally. Oh gosh, this is not good. Oh, sorry. Not good, not good. I'm spitting everywhere. Trying to be Father Christmas is not working. Welcome back to Closing Bell. So Santa rally is here. I hope everybody's enjoying the festivities or locked down at home, but watching the stock market going up, up and up. So the stock market's here. It's been here since last Monday, last Friday anyway, and things are performing really, really well. So enjoy the ride. That's all I can say. Enjoy the ride. You don't get the Santa rally every time. I've been in the stock market for so many years, and every time, like last year, it was all about the trade war, and the year before it was all about cryptocurrency booming in 2018, and the year before it was all about some other crisis somewhere. But you don't really get this Santa rally feel where everything's going up. So this year is a spectacular one. I don't think I've seen in the last 3 years, and this is going really great. Fireworks everywhere. But the one thing that really caught my mind today, actually, in fact, I wasn't watching the stocks, I was watching Bitcoin. Bitcoin, I literally sat there last night, watch it go up from 20 to 21, then 22, and then 23. It was like a stopwatch clock. Where the heck is it going? So loads of investors, loads of institutional investors are actually putting money in, transferring money and buying Bitcoins out into the funds. And there are lots of retailers, there are lots of people like you and me are trying to sell cryptocurrencies. There are people selling at 20 and they regret that people sell at 21, regret that people sell at 22. So I think it's not a great time to buy, but it's a good time to sell. But the thing is, we don't know how high it will go. And our prediction are saying that it might go up to 30,000. But is it going to go a straight line or a bumpy road? We don't know. I'm not surprised if it hits 30,000 this weekend. It is that scary, it is that volatile, and I regret not buying it last week. Anyway, not everybody is as lucky as that. So a couple of stuff that I want to cover today, and two key stocks area that I want to cover. So Fiverr fell down to 197. It dropped about 2-3%. It was already dropping yesterday, and then towards the end, it bounced back up to $204 per share. Upwork, on the other hand, has been soaring from the likes of early 30s all the way to 40. So Upwork will be hitting $40 per share, and they're doing really, really well. And what's the news? There's not much news out there. The only news is there's a report that's from Fiverr and also Upwork that 1 in 4 people are willing to stay at home to work remotely. Regardless of them working in offices before, 1 to 4 people are already sounded that they prefer to work from home, and it's working for them, and companies are starting to look into it. And then once they work from home, they can actually find additional time with the efficiency to do other freelancing scope as well. So people are actually doing dual jobs now, 3 jobs now. They're taking on tasks because of the skills they have. And it shows that the world is shortage of people with experience and skills. Even a great unemployment, but people who are hitting with 10, 12, 20 years experience are in a good mindset to provide services and as well as their work. So it's looking really good. But however, the reason why Fiverr fell in today is because rumors on the street are saying that Facebook is coming up with freelancing marketplace on their app. So Facebook is building like a Fiverr platform within Facebook in the marketplace. That's amazing. It's going to create opportunity. But is it bad for Fiverr? It looks like that way. So I was a bit concerned today. I sat down, relaxed, had a cup of juice and think about it. Is it a real genuine concern? And I think about it. It took Fiverr to build a platform for filtering, for review, for professional scope skills, categorizing it. It took Fiverr about 10 years. It took Upwork about 6-7 years. So Facebook is not just to come and take over. I know Facebook virtually killed Craigslist and Gumtree completely the marketplace, and they're looking to do this. But I think it is not as easy as you think, because some professional work, unless you're looking for somebody to clean your house or a handyman to deck your lawn, but you're not going to get professionals like web creator or a YouTube manager or an architect from Facebook. Would you hire an architect from Facebook? But Fiverr freelancing, Upwork freelancing platform is still a whole different ball game. So the next thing I want to speak about is do not time the market. I've been reading comments of people, newbies, and also some seasoned investors coming saying, when should I buy a stock? When should I buy this? I've done my research. I like the company. I want to go in, but I don't know when to go in. All I can share with you is if you've done your fundamental research, you know the business is good. You know that there's no other competition that's better than this business, and it's long term. It is not a bet, but it's an investment. It's not a risk. It's long term that you can foresee a good future in the next 5 to 10 years. Then you should start small. You should start betting it small, investing it small, regardless of the price. Let's say A, B, and B, $150 just now. You know that it's going to be good. Go in, put it back in. If you have planned to invest $10,000, go in with 500 first. Use your Robinhood or Trading 212, your commission free. Go in and then start averaging down if it does drop, or buy on the momentum. I don't advise anybody to wait for a share price to Tesla to drop to 400, Tesla to drop to 450. If you really believe in Tesla, if you really believe in Fiverr, if you really believe in Google, if the stock that you know really, really well, Plug Power, that they're already well established, not speculative, then you should go a little bit in and then start averaging it down. Because at the end of the day, you're a long-term investor, you want to get in, you want to own a piece of that business. So don't try to time the market, and also don't go all in. I've spoken to a few folks, they've gone all in, they've gone on the price action so high and everything starts dropping and they felt a bit silly. That's the wrong way to do it, and then they're going to start selling off and try to buy lower, they're at a loss, they're stressed out, they can't sleep. So go in small and then start buying up. That's what I did with Facebook stocks. When I first started investing in Facebook 7 years ago, I bought Facebook $300. Okay, then I started topping up 300 and then 1,000 and 2,000, and after 5-6 years I ended up owning about $20,000 worth of Facebook stock. You know, it wasn't at the initial price I paid was 65, it was hovering about 110, 120, but there was a price I paid for averaging down. Every time it dips, I buy in, because once you like the stock, all you care is about buying, you don't care about the selling part. So I hope that helps you guys just to make a decision. Do not time the market. Just get your foot in the door and then make your presence felt by buying over time. So this is me on the closing bell on a Thursday, and I hope you enjoy it. Please click like, subscribe, and hopefully to see you tomorrow for more Santa Rally. Ho ho ho. Take care guys. See ya. Bye.